Hello and welcome. In today's video, let's talk about tax benefits that you would get if you stay in a rented house. These benefits can be availed by salaried individuals as well as self-employed persons. If you are salaried, then you can claim HRA, that is House Rent Allowance Exemption, and if you are self-employed, you can avail deduction of house rent that you pay. In this video, we'll discuss in detail HRA exemption for salaried individuals and deduction of rent paid for self-employed as well as salaried individuals. But before we begin, if you haven't already, do consider to subscribe to my channel for more videos related to income tax, GST, etc. First, let us talk about HRA exemption for salaried individuals receiving house rent allowance from their employers. Least of the following is exempt. 50% of salary if the house is in Mumbai, Delhi, Kolkata or Chennai, or 40% of salary if the house is in any other place, or HRA received for the period of stay in the rented house, or excess of rent paid over 10% of salary. Salary here includes basic salary, DNS allowance, also known as DNS pay or DA, and sales commission as a fixed percentage of turnover. To understand this better, let's say you stay in a rented house in Bengaluru paying a rent of 20,000 per month. Let's assume your basic salary is 50,000 per month, so for the year it is 6 lakh. Let's assume you receive house rent allowance of 25,000 per month, so for the year it is 3 lakh, and you pay rent of 20,000 per month, so for the year it is 2.4 lakh. Let's now compute exemption. First, 40% of salary because the house is in Bengaluru, and salary here is basic salary, that is 6 lakh. So 40% of 6 lakh will be 2.4 lakh. Then HRA received for the year is 3 lakh. Then we need to compute excess of rent paid over 10% of salary. Rent paid for the year is 2.4 lakh. So 10% of salary, that is 10% of 6 lakh is 60,000. The difference between the two is 1.8 lakh. So the exemption that you will be able to claim is 1.8 lakh. To claim this exemption, you are required to stay in a rented house. If you own a house and you let that house to someone else, but you stay in a rented premises, you will still be able to avail this HRA exemption. If you own a house but you stay in a rented house, then you will be able to avail simultaneously exemption of HRA and deduction of interest on home loan if you have availed home loan. If you stay in a house owned by your spouse or your parents or other relatives, and if you regularly pay rent, then you will be able to avail HRA exemption. In order to avail this exemption, you are required to submit rent receipts and rental agreement to your employer. If the annual rent is more than 1 lakh, then you are required to provide to your employer PAN of the house owner. But if you have opted for alternative tax regime, then you will not be able to avail this HRA exemption. If you would like to know more about alternative tax regime, you may consider watching my earlier video, the link in the top right corner. Now let's go through the benefits when you are self-employed or if you are salaried but do not receive HRA from your employer. Maximum deduction that you will be able to avail is list of the following. First, 25% of total income excluding long-term capital gain, short-term capital gain and deductions under section 80C to 80U except 80GG, or excess of rent over 10% of total income so computed, or 5,000 rupees per month. Let's consider the same scenario, that is you stay in a rented house in Bengaluru and you pay rent of 20,000 per month. Let's say you are self-employed and let's assume your business income to be 13 lakh for the year. You do not receive any HRA. So rent paid for the year is 2.4 lakh. And let's assume your deductions under section 80C, let's say it is public provident fund and insurance, and total of the deduction is 1 lakh. Let us now compute deduction. First, we need to compute 25% of total income. Total income here is 13 lakh as reduced by deduction under section 80C, which is 1 lakh. So total income is 12 lakh. and 25% of this total income, that is 25% of 12 lakh is 3 lakh. Then second, excess of actual rent paid over 10% of total income. Here actual rent paid is 2.4 lakh and 10% of total income, that is 10% of 12 lakh is 1.2 lakh. So the difference between the two is 1.2 lakh. And third is 5,000 per month. So for the year it is 60,000. So the max deduction that you will be able to avail under section 80GG is least of the three, that is 60,000 in this case. In order to avail this deduction, you are required to stay in a rented house. You or your spouse or your minor children can't own house anywhere in India or abroad. You are required to file Form 10BA on the income tax portal. We'll shortly see how to submit Form 10BA on the IT portal. But if you have opted for alternative tax regime, then you will not be able to avail this deduction. Let's now see how can we upload Form 10BA on the income tax portal. First, log in to the IT portal, click on e-file, select income tax forms, then file income tax forms. Click on persons not dependent on any source of income. Click on Form 10BA. Select the assessment year. For example, if you are filing Form 10BA for financial year 2021, select assessment year as 21-22. Click on Continue. Let's get started. In the House Property Details section, provide details of the house including rent, details of the house owner, etc. In the Declaration section, once you certify, the Preview button would be enabled. Preview the form and proceed to e-verify. Once you e-verify the form, uploading of Form 10BA is complete. Let's now summarize what we have understood so far. First, who can avail? HRA exemption can be availed only by salaried individuals receiving HRA from their employers. But house rent deduction, that is deduction under section 80GG, can be availed by self-employed or salaried individuals not receiving HRA. When can you avail the benefit? HRA exemption or house rent deduction can be availed if you stay in a rented house. What if you own a house? If you own a house, you will still be able to avail exemption of HRA if you stay in a rented house. Further, if you have availed any home loan, you will also be able to avail deduction of interest on home loan. But if you own a house, you will not be able to avail deduction under section 80GG. Further, if your spouse or minor child owns a house, you will not be able to avail this deduction even if you stay in a rented house. So that means if you own a house, you will be able to avail HRA exemption if you stay in a rented house. But if you own a house, you will not be able to avail deduction under section 80GG. Further, if your spouse or your minor child owns a house, you will not be able to avail this deduction even if you stay in a rented house. Next, what if you don't own a house? You can avail HRA exemption if you stay in a rented house. If you stay in a house owned by your spouse or parents or relatives, and if you regularly pay rent, you will still be able to avail HRA exemption. If you don't own a house, you will be able to avail deduction under section 80GG. In order to avail HRA exemption benefit, you are required to submit rent receipts, rental agreement to your employer. PAN of the house owner would be required if the annual rent is more than 1 lakh. In order to avail deduction under section 80GG, you are required to file Form 10BA online on the income tax portal before you file your income tax return. If you enjoyed this episode, you may like the video. You may spread knowledge by sharing this video with others. Thank you for watching.